Hello, everybody, and welcome to this AMA for xt.com for the first anniversary. We are going to have amazing guests, and we are talking about DeFi. DeFi, decentralized finance, has been impressive, and it has grown crazily during the year 2020. Innovative, the future of finance, the greatest opportunity of the last 50 years, but also a bubble, dangerous, and to be regulated. It has been defined in so many different ways, even contradictory with each others, but it is definitely here to stay. So what awaits us in the next years to come? This is the main topic we are going to discuss with our amazing guest, which I add them now to this AMA. Hello, everybody. Can you hear me, guys?
Hi.
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 Hello.
Hi. Yeah.
Hi, everybody. Yeah.
Welcome. I hear and see you, all of you, perfectly. So welcome, guys, and thanks to be here with us tonight. I would like to ask you, all of you, now to share who you are, what you do, and a very brief introduction of your project. But then we are going to get deeper with each other. So I would like to start with Veron, who is a co-founder of Desin Protocol. Veron.
Okay. Thank you so much. Good evening, everyone. This is Veron. I am co-founder of Desin Protocol. Happy to meet out everyone here and excited to join xt.com 4-year anniversary event and wish xt.com continuous success in Web3 crypto space. Let me share what we are doing. So Desin Protocol is a decentralized asset management protocol. Our vision is allow everyone to become a professional portfolio manager in Web3 spaces. Desin Protocol is a technical protocol platform which allows the user without any restriction to create and manage the portfolio with multiple value token, NFT, and more derivative digital asset. Yeah.
Okay, thank you for this brief introduction about yourself and about Desin Protocol. Now I would like to keep going with Gillian Wu, which is a co-founder at Neptune Mutual.
Thanks, Marco. So good evening, everybody. Jillian here, co-founder of Neptune Mutual. Neptune Mutual is a peer-to-peer on-chain cover protocol based on parametric model with the aim to protect CeFi, DeFi, and Metaverse projects. We talk more about the model, how are we differentiated versus other peer protocols. But as you may see from my virtual background, as we speak, we're hosting the last round of testnet competition. So we welcome everybody to come and try, and naturally rewards and surprises shall be part of the deal, particularly for those who come actively engage with the protocol. And if anybody can find any last issues, we'll much more appreciate with that. My role within Neptune Mutual is more on fundraising and BD. Before founding Neptune Mutual, my last role was within CeFi. I was in charge of asset management unit within Huobi Global. And before that, I was with traditional finance, having worked as fund manager, spending most of my career within insurance companies, both within the European insurers and Asian insurers. So thanks a lot for having me here today.
You switched to the dark side lately then. So let's keep going with Adam Efrati, who's project partner at SSB. Adam is not yet here, so let's keep moving to Alex, CTO at REDLC. Alex.
Hey, how's it going, guys? Yeah, I'm the Chief Technology Officer at Red Light Finance, known as Red LC for Red Light Chain, because we are a layer 1 gasless blockchain, 100% and fully gasless. Is an absolutely amazing innovation to the crypto technology space and blockchain technology specifically. It allows us to enter into industries that otherwise would not even consider blockchain technology because of the unpredictability and expensive gas prices. And we've completely eliminated that problem.
Okay, thank you, Alex. Let's move on with Kayang. Sorry if I spell your name wrongly. Who's CEO at Xbank.
Yeah, thank you, Marco. Thank you, guys. Thank you for xt.com for having here. So my name is Kang. I'm the CEO of XBank. So basically, XBank is actually an all-in-one portal for Web3 and cryptos, and for the beginners to find out the hottest asset events and communities in Web3 world and Web3 space. And so XBank is trying to like making Web3 and cryptos as easy as possible, like shopping online for beginners, so that they will be able to like reach out DeFi or DeFi asset, DeFi products as easy as everything they do in the daily life. So for me myself, I actually from the same company as well. So I was an R&D engineer in Huawei Global before, and I was working on yeah, nice to meet you. So
Nice to meet
I
you.
was working mainly on the blockchain technology and smart contract engineering before in Huawei Global before, and so yeah, thanks all for having me here. Let's just go deep into and dive into DeFi.
Okay, guys, thank you for this introduction about yourself. So let's go more deeper, as you said, into the rabbit hole. So, guys, I would like to ask you, what is unique about your project within the DeFi industry, and also, why should DeFi users be interested in it? We can start again with Veron.
Hello. Yeah, can you hear me?
Yes.
Yeah, okay. Oh, why should DeFi users interested in our platform? There has four key features I want to share here. Number one, everyone just need a few minutes can create the your own portfolio via a very simple interface on our platform without any restriction and high cost to become the fund manager. Second, so our vision is make everyone equal in the Web3 space. We create a decentralized, autonomous, and trusty democratic the solution to everyone in the world can be come to fund investor. That's why we create the distinct protocol. Third, transparency in DeFi. So every single transaction can be tracked on chain. Fund manager cannot be accept, customized, or withdraw the fund from the investor based on the individual action. Number four, a DC protocol is a one-stop solution. Fund manager do not need to worry about the fundraising and other tone support and manage the fund. The only choice for the distinct protocol platform will provide the fund one-stop solution. Let fund manager make it easier to focus for their perform the investment strategy. About the region the user will be using for distinct protocol. Yeah. And we are happy to say that we received over 30 top tier corporate VC institution and 12 crypto exchange and public chain to become our investor together to build Web3 spaces.
Something big is going on there. That's very cool. That's very cool.
Yeah, thanks.
Okay, so what about you, Gillian? What you can say about the question I just made before?
Yeah, sure. So I think first of all, for the DeFi industry to really broaden its user base, and especially to enable more institutions to participate in DeFi insurance solutions is definitely a must. Over the past 2 years, I think each year we've had assets loss up to more than $1 billion. Is quite alarming, and the media always love to spread this negative type of news. And without any solution or credible solution to mitigate such risk, it's hard to attract normal users into the space. And having said so, we're not the first insurance protocol, and there will continuously always be teams and efforts and try to break through in this area. However, each comes with a bit different approach. Insurance is somewhat of a more complex solution to deploy on chain compared to a DEX or payment rails. There is a definition of risk. Let's say how to price a risk and the underwriters for the risk and how the claim processes will work. So Neptune Mutual is different from a number of peer protocols in a few major areas. So one is we're based on parametric model. Basically, it means that for users, it's much more user-friendly, and policyholders does not need to go through individual assessment after an event because the incident resolution happens on the incident level. So once the incident is confirmed, every policyholder will get a payout So there's no hassle to collect any loss proofs. And for liquidity providers, we actually choose to underwrite all the cover pools in stable coins instead of Ethereum or any other token, so that the capital provider does not have to worry about the principal capital volatility. They only need to check on the risk reward, whether they're happy with the yield generated or not. Also, we will issue proof deposit tokens or POS tokens to the liquidity provider, which are fungible ERC20 tokens. So they can trade this token in secondary market as a yield-bearing token instead of having the capital locked and are unable to withdraw if they've missed the redemption period.
Mm-hmm.
So those are the major things. Also, we would offer SDKs for local integration for instance, if any DEX or even asset management protocol, if you would have ongoing basis a budget for insurance fund, just save it for a rainy day. If something happens, you want to sort of compensate for your user, then actually you can choose to integrate our protocol, whereby your users will be the one who purchase the covers, and you can stream easily your insurance fund into the cover pool as underwriting capital. So it still serves the same purpose, but able to earn some extra yield for your capital. So those are, let's say, the key things that where we're different, and we welcome anyone to again try and see how it works on testnet, and we're launching on the mainnet very soon.
Yeah, sounds amazing, Gillian. Sounds really amazing. Let's proceed with Alex. Alex, feel free to share and go also into more detailed explanation of what you're doing, guys.
Awesome. Yeah, sounds good. So us at Red Light Finance, we created an extremely unique decentralized blockchain that allows us to continue to push the boundaries of decentralized finance, whether that be banking the unbanked, helping out people with gasless transactions in third world countries by sending money across the world. We want to utilize our blockchain to infiltrate industries that would otherwise not use blockchain technology, whether that be the medical industry with medical data, while utilizing what we're coming up with, which is called non-fungible medical data, NFMD, instead of just regular NFTs. They're a little bit more secure, non-fungible medical data. We want to utilize that inside the payment processing industry to allow users all over the world to send and receive money through Pandora's Vault with little to no fees, right? Because if you look at companies like Western Union or any other payment processing company, they charge upwards of 8 to 15% just to send a little bit of money to your family across the world. It comes at a really big expense, especially if you're sending money across currencies and they have to already do an exchange rate. We want to change the way people are doing that. And we feel like through our 100% gasless blockchain, we can affect those industries in a decentralized manner and really improve how we can operate.
It's very cool, guys. I see also the name is very provocative, so it stays in mind for sure.
For sure.
Okay, we move to Keyang. And Keyang, okay. I have also a question. Maybe what's the X-Bank's focus on now, and how it will contribute to the DeFi industry in general?
Yeah, thank you, Marco. So, we a little bit different. So actually, as I just mentioned now, that we are building a beginner platform that to help consumers or beginners to achieve Web3 asset and crypto assets easier. But besides this, we're also trying to build an extended network, which is an actually unified on-chain consumer solution, and which is actually designed to improve money efficiency for users to buy and use their everyday assets and service they need in the Web3 world. So basically, the mission of X-Bank is actually to try to make a use of the on-chain consumer data by leveraging soul-bounded tokens and DeFi protocols and smart contract wallet. So we wanted to make it to become a new engine of Web3 asset and cryptocurrency world. And finally, we will be able to explore the critical loss part of the lending market, the identity-based general credit. And so basically, X-Bank Network is going to implement several core features and functionalities to explore the potential competitiveness of our missions. So the first one will be like we're going to build up a credit-based consumer credit network so that we will be able to have a better lending model. And then we're going to build expand debt center so that we can based on our credit model, so that we can have a better estimation for the on-chain lending market. And besides to have the sale market itself, what we call Web3 portal, so which we're going to include on and off ramp gateways and swap functionalities, so that every beginners will be able to buy now pay later on Xpeng, and then will be able to issue their debt and will be able to connect to some LP and debt investors with their credits, with their on-chain credits. So basically, Xpeng is trying to explore that something lost actually in the DeFi market. As you guys can see now, the over-collateralization is actually the mainstream of the DeFi market, but trying to like make moves from this, that we're trying to include credit into the lending market to make the lending more accessible and then make the risk more accessible. So that's what Xpeng doing exactly, and that's what we are trying to contribute to the DeFi world. We are trying to promote a new model, a new parameter in the DeFi market. Yeah.
Thanks for sharing. Thanks for sharing, Kayang. As Gillian before mentioned it properly, I have to say also, vulnerabilities and protocol weaknesses and hacks has been a very bad storytelling, guys, for the industry during all the last years, especially all the last years. So I want to ask you now, guys, because it's a very central topic, this one, and it's also very important in terms of marketing and seriousity of the project. What precautions has your team taken to address DeFi vulnerabilities to not zero risk, because of course it's impossible, but to a lower risk? Veron, you can reply first. You hear us, Veron?
Sorry, I'm mute. Okay. As decentralized asset management platform, DeFi protocol achieves very important thing. Create a new digital asset product combined with the phone Web2 function and Web3 feature. For the fund manager, the most important feature we want to portfolio manager focus on their investment strategy. For user has more option to invest for low to high return fund structure product. So in this protocol, the structured product we created based on the two function for combined with the Web3 feature. The first is open-ending structure. Second is closed-ending structure. For open-ending structure, investor could be issued and redeem the portfolio token anytime, anywhere, with the portfolio manager can sell anywhere. For closed-ending, it's better suitable for developing active strategy, which require the time period with variable liquidity token and NFT. So I can disclose here in advance there are two important products. They will officially launch for November. Can you please looking forward this protocol?
Okay, let's wait for November then. Gillian, feel free.
Yeah. So we are actually built to help protocols and users to mitigate or manage the risk and impacts from security incidents. So our tech founder, Bernard, he is a bit of a security nerd, if I may say so. He used to be a smart contract auditor, and he's very vocal about hacks and exploits. He sees risks from pretty much everywhere: front-end DNS security, supply chain attack, back-end. So we have a comprehensive list of IT housekeeping rules that all employees must follow, such as 2FA and mail passwords at least 50 digits long. Every now and then it got locked out. We are actually building a security dashboard also, where not only our own project, but also those projects that are under coverage or on Neptune Mutual shall be able to benefit from. So our requirement from the safety of smart contract side is very strict. We have hired the services from top-tier smart contract auditors, including BlockSec, and OpenZeppelin. And over the course of next few years, we plan to increase our spending on IT and on smart contract security. So there can't be enough attention paid towards overall cybersecurity and crypto hacks on an ongoing basis, I guess. Our tech team does actively monitor what happens on chain and write analysis for incidents that occurred within DeFi space and aims to give advices to users as how to avoid these incidents. And actually, each and every new lesson that we learn, we do first endorse within our own protocol.
Okay, that's clear. Alex, what's your opinion about all these vulnerabilities in DeFi and how you guys are thinking to at least mitigate them?
Yeah, 100%. Vulnerabilities will always be there. There's nothing that is ironclad and perfectly secure. However, on a technology level, crypto technology and blockchain technology and cryptography itself is extremely, extremely secure. The number one issue you find in a lot of these vulnerabilities is not necessarily the technology's fault, but more so the human factor, right? Exploitation, social engineering, getting people involved and hacking them from social engineering is a lot more common than you would think. How we're approaching that at Red Light Finance is utilizing a proof of authority and proof of stake hybrid consensus mechanism in which, and for vulnerabilities specifically for our blockchain, it would take an over 51% control of all validators in order to gain or at least try to attempt any malicious acts on the blockchain. Now, with that being said, as say this exploiter is getting through and is obtaining malicious validators, during that process, we do have a decentralized voting mechanism that can kick off malicious validators. So it'd be extremely difficult to even accumulate that 51%. What we wanted to do is we want to eliminate as much of the human factor as possible for the overall security purpose of the chain.
Okay, thanks, Alex. That's very cool, very expressive also. K Young, how do you think about that?
Yeah. So the critical thing that we actually recognize and that we want to address would be like it's like establish smart contract security itself. We will more focus on the liquidity issue on the DeFi market and on the DeFi contracts. So the key problem here will be like the current model of the lending market or the current model of the DeFi itself is actually based on the over collateralization model, and we figure out that the over collateralization model is actually not a booster of the economicals because it actually distract the general asset of users from the real use of these assets or these users. So what Xpeng actually done, it will be like we as I mentioned just now, we actually try to introduce a new parameter, what we call consumer credit or what we call on-chain consumer credit, that we can help the debt issuer, or we can help the lenders, the borrowers to have a better understanding in the debt market about their behavior and about their action history, what kind of NFT they already own and what kind of DeFi protocol they have already invested. And for the lenders, they will be able to recognize, or they will be able to have a better identification of their risks in the DeFi market. They will know that what kind of people is borrowing their money, and they will be able to numerize this kind of risk. And so what we have done is actually, like I just say, we actually introduce a new parameter into the lending market rather than just keeping the same risk estimation model. Besides this, we also introduced the what we call the soul bounded token scheme, that we will be able to bound we will be able to bound the identities and able to bound the events and assets of different kind of these participant or borrowers, that we will be able to help them to show their ability of like repaying their debts in the future. So basically, that's the idea of the risk control of the Expand network and what we actually contribute to the DeFi world. Because we are thinking about that. I mean, it's not the bull market. It's like it's the building market. It's the builder market that we need to try to introduce new stuff, new things into this market. So that's what we are going to do, and that's what we're actually doing. Yeah. Thank you.
Okay, thank you, Karin. Meanwhile, guys, let me welcome also to Adam.
Hey guys.
Adam, can you hear us? Hi, Adam.
Yeah,
It's Adam Efradi, project partner of SSV. Welcome, Adam. Adam, please do a brief introduction about who you are and how you joined the crypto space, and also a brief introduction about your project.
Cool. So really quickly, I joined the space around 5-6 years ago. We work on a project called Blocks. We're a non-custodial staking solution, and as you mentioned earlier on, we're also the core developer of a protocol called SSV. SSV is a distributed infrastructure for Ethereum staking. We've been working on it for the past 2 years or so, and probably going to hit mainnet earlier next year. And yeah, we mostly focus on Ethereum staking. So it kind of relates to DeFi, but it's not pure DeFi.
Okay. Thank you. So I would like to start with you with our next question, which how and if do you think your protocol or the app will address a traditional finance institutional needs? I mean, what's your opinion in general about the traditional financial institutional, and also if the protocol you guys are working on can help with this kind of merge?
Well, if you look at traditional finance, I think it's pretty straightforward. So what DeFi and crypto is kind of missing up until recently, at least, is low risk, low reward type of investments and a yield curve, and something that that kind of resembles interest rates, right? If a lot of the modern economy and traditional finance is built on those concepts, right? If you, for example, take a mortgage on your house, it really, the amount you will pay for it will really tie it back into what is the Fed fund rates, for example, if you are in the US, right? Or the amount that you will expect to receive on a bond will kind of also tie back to the yield rate, right? And then the yield curve and the rest of it. What people are paying for stocks, for example, right? We've been seeing Wall Street plunging over the past few months, and that's because central banks raised interest rates, right? So those instruments and those concepts are kind of foreign to the world of crypto, right? We don't have those kind of core concepts in place at this point in time, or at least we didn't used to. But since the merge and since Ethereum became a stakeable asset with a yield-bearing asset, then you have something that very resembles a low-risk, low-reward kind of instrument, which is kind of similar to treasury notes that the Fed will issue, or the treasuries in the US will issue, and you have a yield rate. Right? That's the kind of the APR that people receive, or the APY that people receive for staking their ETH. So I think the concept of ETH staking kind of brings the world of TradFi into DeFi in a more meaningful way, and I think that a lot of institutions that are looking for low risk, low reward instruments, so not staking or using like a crazy DeFi strategy vault, looking for something a bit more easy and friendly to begin their journey in DeFi, will probably choose staking before anything else.
Okay, very clear. Alex, what's your opinion about?
Yeah, so my opinion regarding traditional finance is extremely important, because if you really look into what traditional finance is trying to accomplish, it's kind of going the opposite way in which consumers are leaning towards. Consumers, in my opinion, want more ease of access to financial institutions or fiat currency, and they want ease of access when utilizing transactions of that currency. And traditional finance is not doing that, right? If you look at what banks are making and looking at all the hoops you have to jump through just to send money or receive money, it's becoming quite a hassle. And the percentage fees are ridiculous. There's no reason at all that a bank needs to charge 8% on a transaction, right? It just doesn't make sense. When you get up into 100,000, 200,000, 300,000 transactions, which is becoming more and more common due to inflation, due to rising prices of housing, rising prices of gas, you're getting these higher and higher transactions. That 8% is worth a lot of money, right? And say you're buying it right now, the average home is $300,000. So you're buying an average home with $300,000. That $800,000, 8% transaction fee just for moving money from one bank to another is absolutely insane. And we want to make sure that we try to change that with Red Light Finance, right? We're trying to introduce different types of payment processing systems and different types of escrow services to allow us to mitigate that cost, whether it be gas prices going lower, accepting crypto for escrow services, for purchasing of real estate, for purchasing of whether it be cars, whether it be real estate, whether it be just your average everyday consumer items like a laptop or a computer. We want to make sure we change that. And we're aiming to do that with Magenta and Red Light Finance's card as well.
Yeah, guys, I hope you make it, because monopoly is never a good thing, and this is really, really needed. Gillian, do you wanna add something about this topic?
Sure. Yeah. So there is actually a clear gap in terms of the willingness from traditional insurance company to cover crypto service providers, even for CeFi exchanges or custodians. Unless it's regulated, it's very hard to procure insurance policy. The very few players who do offer any such policies typically have restrictive terms, and hardly any of them would touch on DeFi or insure for DeFi at all. And a very practical example being back when I was at Huobi Asset Management, we launched a number of passive funds under Hong Kong SFC regulatory oversight. So for those passive funds, we would want very much love to use the protocol from Adam to earn some staking passive yield, right, to generate actual return for the investors. But there is a question we couldn't address for the regulator, being if we stake the assets into a DeFi protocol, who is a counterparty when it's get hacked and get lost, right? So unless we ourselves have insurance, or because it's DeFi, so you don't have a counterparty to hold against. So basically, I think we are probably not the only one for sure that had that issue, right? There is so much, a very large size of billions of assets in passive strategies that can be mobilized if there is a solution to address that. And even if we sum up all the DeFi insurance protocol together, judging by the TVL, it's like a tiny portion of demand being addressed. And another angle to this is that for traditional insurance policies, let's say for P&C or general insurance, those are still primarily being sold via broker and agents today. Now, naturally, some insurtech solutions, particularly in the micro insurance space, that help build web portals for distribution, make it easier for users to acquire policies and reduce agency cost. But the Web 2 model does not address the issue of trust. And so going forward in the longer run, we actually foresee there may be more type of risk from traditional space to be underwritten by a peer-to-peer model on chain. And we hopefully can also play a role in that.
Okay. Let's keep going with Veron, maybe. Veron, do you like to add something to this topic? We can't hear you, Veron.
Sorry.
Okay.
Okay. For my angle, for SandPi is less more transparency. So what we do that for DeFi, we can help them to source because we can provide a brief between SandPi to DeFi to user, the more easier to transparency solution. And our product actually can partner with the over 42 institution like crypto exchange, so we can provide the decentralized access management protocol product and to them to dispute and provide for transparency product. That's what we doing. I believe that that is the very good option to source for sample uncertain, unclear for matter. Yeah, that's my opinion.
Okay. Okay, guys. What about Kayan? What about Xbank?
So for the traditional financial institution is so the key point will be like either the user of DeFi or the financial institutions, they like all of us, they need liquidity, right? And when they need liquidity, which means that they will not be able to accept like over collateralized stuff that like the general DeFi protocols. And how Xpeng network or Xpeng protocol going to address this time will be the same. The consumer credit we try to introduce that one, you will be able to like identify the identity of a group of address, or you will be able to like project the future income of certain people or certain address. Then you will be able to have a better risk model that to estimate so what kind of risk you're going to face. And the another key point here will be like, so for the financial institutions that we still don't really have a very like a very native on-chain financial institutions like who is actually specialized in lending, who is actually specialized in finding a very nice destination to invest or to lend out their money. So when this kind of financial institutions will be able to make use of Xpeng network, they will be able to figure out, or they will be able to find out like a very clear, very detailed information or idea or data of the borrower, and then they will be able to finish the estimation of the lending like the traditional world. So anyway, so Xpeng like with
Kayan, I can hear you. Can hear you, Kayan. So let's move on to the next question, waiting and hoping that your connection is going to get a little bit better. So guys, I am going to ask you something which is also related to your specific project, but not only. Of course, nobody have the crystal ball, and nobody can predict the futures. But what do you think, guys? What kind of news or new features we can expect in the next 2 years into the DeFi industry, guys? And also, what's about your project? What's your next step for your personal and specific project? We start with Gillian.
Sure. I think we've seen a lot of innovation in the space already, initially with DEXs and swaps and more later on lending, and now we have derivatives in the DeFi format. So there has been lots going on, and people are now more working on, let's say, how to make the protocol more user-friendly, easier onboarding for let's say, OG, so type of normal users, because like people come and trade on Curve is not all that easy, right? And to understand how to do it and feel comfortable. I mean, if you speak to the first-time users, it's a very dangerous, or let's say a daunting journey. So I think we also see more initiatives of, let's say, focusing a lot more on the UI and UX instead of only heavily working on the protocol itself. So user experience is quite important. And also there are more and more cross-chain protocols. We've seen how risky the bridge can be. So there are more projects working on the fundamental layer of how to make the chains, let's say, interoperable. type of like layer 0 or similar type of projects. Let's say the reason I'm mentioning all of this is that in a different capacity, also do investment. So we've seen a lot of new projects coming out. But regarding Neptune Mutual with our own product, so initially after launching on the mainnet, naturally we work on more on engagement, expanding the layer protocol under coverage. Beyond that, we are already in the middle of designing a few categories of NFTs that will also have utilities. For instance, the NFT owner could have discounts on the premium paid for coverage, or there are more things being designed. We will announce as we go. We also build the security dashboard, as mentioned earlier, that is aimed to help projects to sort of mitigate or being alerted for any incidents beforehand instead of having a resolution after the event, which is not good for anybody. So, I guess next to it will be indeed that we are considering and looking into what type of risk, particularly those type whereby there is already established market price or historical data to price those, where it's easier to be underwritten on chain and enable trust to let's say a trusted version without intermediary and agents. So we could also list those type of risk and underwrite it, on the Neptune Mutual protocol.
Okay, very good, satisfying. Adam, do you wanna add something about this?
In terms of where I see DeFi going next year
Well,
or two.
I remember I was, of course, I was following DeFi, and every month, as soon as you start to understand one protocol, it's already gone. It's already time, to drop it and to go to the next one. It was crazy. So, what do you think is going to happen in the next 2 years into the DeFi industry? Meaning, what features we can see, or also what will happen in SSV also?
Right, so I think SSV is not a DeFi protocol, so I'll leave that aside for the time being. Just to answer the question quickly, I think an interesting kind of phenomenon we're probably going to see unfolding in the next year or two is DeFi offering solutions and services for institutions. So something that is a bit more, somewhat closer to CeFi, where you have KYC, you maybe have closed gardens of different companies are able to access certain service, whitelisted addresses and the rest. And there'll be a whole sort of parallel industry that will serve companies and institutions specifically, which is not open to the general public, but it kind of runs next to DeFi. And this is something that I think we'll see happening over the next year or two.
Okay, and what's going to happen in SSV? I mean, what's your guys your next step, your next to come?
Again, we're not a DeFi protocol per se.
I know. I'm talking just in general. What's going to happen with you guys?
Well, if you continue on this kind of train of thought, then basically there's a lot of regulation that's going to come to the world of DeFi and cryptocurrency in general. You see regulatory bodies, especially from the US, becoming a bit more or a lot more aggressive in the past months. And I think the answer to that is compliance, right? You need to comply to a certain level, but it's also technology, right? You want to make sure that you're as decentralized as possible and that you are anti-fragile in the face of potential government scrutiny. I think that our protocol SSV, one of its core offerings is the ability to do exactly that, right? All of the companies out there, individuals, almost everyone who's touching crypto is probably going to do something around Ethereum staking at a certain point in time. What SSV essentially allows you to do, or allows a company to do, is to distribute their tech stack, their validators, right? So let's say the government tomorrow goes to Coinbase, for example, and tells them, hey, those validators, those addresses, those transactions, you need to shut them down, you need to censor them. If you are using something like SSV, essentially no government can tell you to do this exact thing. So I think SSV in a way plays a role in safekeeping the industry against government scrutiny and making sure we are all safe and decentralized as an industry. So that's kind of our contribution to the space.
Yeah, that's very cool. Young, what's going to happen in Xbank and in the DeFi industry in general?
Yeah. So my best idea would be like actually DeFi will be a very elemental infrastructure of the every start we build on Web3 world. Like in the future, like people gonna to combine NFT into DeFi. People gonna to combine like game, like what we call GameFi or something to earn like with DeFi itself. That I mean in the Web3 world it will be like more economical. That everything, every action stuff, every activity you have is actually have some like economical goals behind it. So the things that we're gonna do happen in DeFi world would be like in the future, DeFi itself will be very elementary. That every kind of stock, every kind of asset, every kind of like a new project itself would be equipped with DeFi protocol in their very underlying part of their projects. And so my best idea would be like I got 2 points. So the first point would be it will be very elementary, like everything in a few happen in the future will have a basic property of DeFi itself. The second point would be like DeFi with like general purpose, like you try to invest in your token, you try to make some money just for the pure investment purpose. This point would be like for the people who are gonna to like make use of this kind of investment tools, they will need to be able to they will need to have like some kind of tools or some kind of platforms to make the interoperability of we use right better platform or a better tool that to make it more accessible and more understandable. Like your APY or API is actually stemmed by some tokens, but for the normal people, for the beginner in the world, they will probably need something easier, like for them to understand like their APY in USD and their yield in USD and how they're gonna do how they're gonna harvest it and how these kind of devices actually be able to connect it with the NFT itself. So 2 points. The first one will be DeFi will be actually a very elementary in the future for every Web3 project, and the second point will be DeFi is actually for like actually mass adoption problem. DeFi will need some kind of app or platform to make the DeFi to more understandable and accessible.
Yeah, they are very good points.
Yep.
Alex, what's your prediction, mate?
Well, I think the DeFi space is going to act heavily like the .com boom happened in the early 2000s. If you really look into that and that bubble that happened, you had a lot of things just come out of it, right, due to innovation. So what I think is going to happen is I think we're in a bubble in regards to the DeFi space, and I think it will pop at one point. But what's going to come out of that is the projects that innovate, the projects that stick around, the projects that are like the PayPals, the Amazons, the eBays, the Yahoos of the .com era. And all of these projects that are continuously building during a bear market, continuously, working on their technology is what's going to, withstand this tidal wave of regulations, this tidal wave of changes when it comes to the crypto atmosphere. And like our colleague said about the government trying to take control of validation, it's very, very important to stick together when it comes to our decentralization and interoperability between blockchains and between projects. So we want to make sure that we do that here at Red Light Finance as well. And we feel like we have the advantage by utilizing a 100% gasless blockchain.
That's very cool, mate. Veron? Yeah, I think he's missing only Veron to this question. Yep. Veron, what do you think? What's your thoughts?
Let me. Okay, I think the DeFi protocol more cherished no matter from user interface and or security purpose also is one of the important thing. So in the future, not only for the next 2 years in future, we also need to think about it, especially cross-chain function and how to solve and how does we secure the smart contract without any bug and what we are need to digging. Secondary is a regulator. My best idea is not only provide for the product, so we need to start focus on building for ecosystem. So for us, is that we involve a more third-party partner to join our ecosystem to provide more Web3 compliance infrastructure platform for the whole Web3 fund infrastructure. And any individual institution can be used infrastructure to build their own business function, including for fundraising, management, or access for one-stop solution. That's what we building. Yeah.
Okay. Okay, guys. Meanwhile, I would like to ask to all our followers. You are so many guys, so just drop some question that Let's use our guest and they know-how to to pick up some. I will pick up some cool question here, guys. I will search for some question here now in the chat. So let's pick up this one from Lilith. Any big challenge of your project, how do you solve it? You can be free of reply. Who want to reply to this one?
Yeah, so maybe me. I'm not sure.
Yeah, go on.
Yeah, so it's still the mass adoption problem. So actually for the beginners and for the new joiners of the Web3 or crypto itself, it's actually pretty hard for them to understand what's the decentralized finance itself in nature, and for them like some people may not be able to distinguish what kind of the difference between investment and debt, but DeFi is actually like something rely on blockchain that which is in reversible and which is actually running 7 and 24, and so for this kind of new joiners or for this kind of beginners, I think the big challenge of Explain will be like how we're going to modify or how we're going to make it easier for beginners to understand or to just like one click or one stop to get into DeFi itself, rather than consider pretty much a lot, and rather than trying to just jump from one app to another app, for normal step or for normal process of new joiner, they need to do OTC on XT.com, and after they got some coins, they need to move it to MetaMask, and then they need to figure out what kind of DeFi project they're going to invest. Then they need to figure out is it safe and how are they going to make the investment. And finally, they need to understand quite a lot of APY APR stuff. And actually they are not actually quoted in USD but in tokens. And so basically the biggest challenge we have now is to make it easier for the mass adoption, for make it easier for new users. And what Xbank have done is we actually promote we actually have a product called Bamboo that we make the investment of DeFi products as easy as invest in a stock fund, so that for users they will be very easy to calculate their yield, very easy for them to understand what's happening after DeFi, and then for very easy for them to get it assessed, rather than move among apps and move among websites and get nothing but just cost a lot of ETH fees. Yeah,
that's true. Gillian, I cannot find the question now because we got so many, but I remember somebody asked if that in background is an NFT. What do you think? What do you say?
If my background is the background is an NFT. It will be an NFT, yes.
Okay, that's very cool.
It is one category, which is a Neptune god. We'll have a few different categories. There are monsters and there are guardians, and each will have different utility.
Okay, very cool. Any big challenge about you guys, about your project, and how do you think you are going to solve it?
So far, we have been building, so that has been going pretty well. However, we are about to launch on mainnet, and the biggest challenge we expect to see is to recruit sufficient, sizable underwriting liquidity. I mean, for any new protocol, it is, even if we're backed by strong VC names, but it takes time for users to get used to it and to trust the brand. Plus, to underwrite, you're still taking a risk. It's different than just staking passively for yield, right? So you take some underwriting risk, even if it's possible to diversify that risk. If you underwrite for multiple dedicated cover, or you underwrite for diversified cover pool, where a basket of projects pulling together, so you diversify your risk, and one incident will not cause the whole principal capital to be lost because they share the capital. Yeah. But still, I guess what make us slightly relieved, or we feel that we have a better chance now, is what we have seen the aftermath of UST DeFi and what has happened. So I mean, people need to understand the yield has to come from something. There must be economic activity or reasoning behind that you earn your money, right? If people underwrite, they earn the premium by underwriting. The real people who's paying the premium to secure their assets. And if you basically, there's a lot of DeFi, like you mentioned, Michael, that something is here and next month, a few months later, they're gone because they have spent all the money and they give it all the tokens as reward. And once it's done, it's death sparrow and it's gone. But actually, the protocol has to be sustainable based on its real economic income that it can generate. And we think for insurance, it is a real economic activity and there's a real demand. So we should be able to also have long-term players that are willing to provide the capital for decent yield.
Okay. Alex, do you think DeFi will be mainstream of economy in the future? I mean, not a part of the economy, but the mainstream part of the economy.
That's a very good question. It's actually really hard to say it if it will or will not. Replacing fiat currency and the infrastructure of the world currently right now is going to be something that will take a lot of time. Do I think that DeFi will be the mainstream of economy? I don't think so. Not in my lifetime. I really don't, just because of the fact that infrastructure changes will have to take place. An entire banking system and organization and the entire banking and financial industry would have to change their complete mindset on what is cryptography and decentralization before that can happen. Do I think it's something that would ever happen? Yes, I do believe that, just because it is, in my opinion, the future. It is something that will allow just the average everyday person to be freer, in the sense where they will not be institutionalized for and forced to be with a certain institution or certain economy. Decentralized finance can really help that and replace that. But like I said, it would take mass amount of changes, not only within the industry itself, but with government and stuff like that.
Yeah. Okay, guys. Adam, do you want to add something to here? See, you have like a very cool opinion too.
Regarding what exactly?
What do you think DeFi will be the mainstream of the economy in the future, or just a big part?
I'm not exactly sure. I think it's probably not going to be the mainstream. Like my colleague just said, definitely not in our lifetimes. And if it will become mainstream in our lifetimes, it will require probably a very, very large, major event happening, like World War III combined with a crazy economic breakdown, and I don't know, other disasters. You can think of whatever you want. So it's probably not going to happen. But I think it's going to gradually become more and more mainstream. So what we are looking for as an industry is gradual adoption, and not to become mainstream immediately. And to be honest, I think we are far from ready right now for the world to rely on this infrastructure and completely adopt it. So we need also time to research, to learn, to break things, to make mistakes, and to get better as an industry. So it will take a significant amount of time, but what we should follow up on is not, us becoming the mainstream solution, but if the gradual adoption is actually happening, or are we stuck in place?
Guys, we need also to innovate, and people like you, we are pioneering in this industry, so we need to keep going and hoping for the mass adoption. It's coming soon. About Xbank, well, the name is basically impossible to spell. Kamsi, let's call it Kamsi. Xbank, how is the Android version of your app going so far?
Yeah. So
Question for Kian, yeah.
We actually the banks also like
I cannot hear you personally. You guys can hear him?
No.
Okay. Kian, we cannot hear you, so you need to check your connection maybe. Okay, guys, I take a couple of 1 minute to scroll the chat if I see some other question. Or let's wait 10 seconds if Young get a better connection. Okay, this one is a good one. And everybody can pick it up. Identity-based general credit. Any opinion about this topic, guys? I think personally that digital identity, decentralized identity in general will be a very, very hot topic for the next bull run.
Sorry, you're asking me? Yeah, I just lost my connection.
Okay, you keep going with the previous answer. No worries.
Yeah, thank you for giving me this opportunity. So yeah, the iOS version, the new version of XIM will be released next week, and the Android version will be launched at the end of this month, so that we will be able finally to serve all fans globally with our Android version end of this month.
Okay.
Yeah.
Okay. And do you want to spend a couple of words about identity-based general credit? Is a question that Jang just asked.
Yeah, it's actually some kind of like quite specific and technological question in the DeFi world. So like I mentioned just now, that people in the DeFi, most of DeFi protocols are actually using the over collateralized model, so that which means that you have to deposit like ETH with like $1,000 and $300 to get like $1,000 of a stable coin back. So which means that you actually stack more value into and then get less value back. And for what we are trying to explore, or I would like to say for what a lot of the Web3 projects are trying to achieve right now, is trying to explore a solution or find out some way that will be able to have a general credit for users. So which is based on your past activities, or based on your actual event happen on the blockchain, so that they will be able to issue a general credit to buy, to stack, to invest, to do whatever you like. And yeah, it's quite a technological problem right now, and we are actually sticking on this aspect. Yeah.
Okay. So guys, now one last question, which is also a personal curiosity I have, and I want to share with you. I mean, everybody has. When the next bull run? Veron? I know nobody knows. Just say.
I think it's a very good question. No, actually, nobody know what is the bull run for, even though say tomorrow or when. But it's general. Maybe we need to think about how to secure for this past maybe 2 years. So for my opinion, maybe in next year will be very good opportunity to rebound. So I subject for Web3 worker builder, so to keep going to build the product, to wait for until the next cycle to come in. That's my opinion. It's no exactly the right or not. Yeah.
Okay. Gillian?
It's about 1 year into the bear market since the peak in November last year. So if history repeats itself, we have good hope next year to see recovery. But share what Varun have said, that we should just continue build.
Okay. Kiyan, what do you think?
So one day you guys see the SPay network token actually to the moon, then it's the bull market. Yeah.
Okay. Hope to see it very soon then, mate.
Yeah, cool.
Adam, what do you think?
No idea. I think a more important question is what will bring the bull run. So I think the first bull run was had a lot to do with the invention of ICOs, right? The second bull run was kind of attributed to DeFi summer, combined with a lot of money printing from central banks. And the next bull run is a question mark, but I think it's a super important question. Like, what will be the main theme for the next bull run? If it'll be NFTs, if it'll be Ethereum becoming POS and becoming faster and cheaper for the world to use, cross-chain infrastructure, or I don't know, L2s, whatever it will be. I think that's what people should really focus on. But to your question, I have no idea when it will happen.
Okay, that's the right answer actually. But how about the next Bitcoin halving? Also, I strongly believe personally that's also it's a very strong drive. Alex, how about you?
Yeah, so if we look historically, like you said, at Bitcoin halvings, you see that bull runs for the DeFi space or altcoins happen shortly after that. And then 2 years after halving, you have a sort of dip. And that's what we're in right now. We're 2 years after the halving of Bitcoin. And I think it'll take 1.5 to 2 years for us to get into a true bull run. But the lead up to it, I think it will be very positive as far as crypto. There's a lot of things that are coming out that are being extremely innovative. And like my colleague said, it really depends on what the next theme of the bull run is. NFTs were huge, a huge case for why we did have a massive bull run and so much money coming into crypto. And I really do think interoperability between blockchains and between the crypto industry is what's going to cause the next bull run.
Okay, guys, I would like to stay here talking with you for another hour, but we already spent so much time. So it was a pleasure to host you all, guys. And as I said before, I consider all of you guys pioneer in this industry, and I'm a strong, crypto believer and crypto lover in general. So let's keep going, keep pushing, guys, and keep developing. And as Gillian said, and Veron said, in the next 1 year, no matter when the next bull run will arrive, let's build.
Yep.
Thank you, guys.
Thank you, everyone.
Thanks.
Thank you, everyone.
Hope to see you soon.
Thank you.
Bye-bye.
Bye.
Bye.